Hi, everybody. Steve Nison, and welcome to this special seminar. It's a pleasure working with FX Street. Okay, they, like me, believe in education. And what we're looking at today is, and for those not familiar with my background, I'll go a little bit more into detail, but I was the first to reveal candlestick charts in the world. Before my work, there was not one candle charting system out there, believe it or not. Okay, how many of you feel like this? I see all those virtual hands going up, right? Miss a Forex trade, right place, right time, 2 exits back. And, okay, first, a couple of questions, and, you don't have to answer these, you don't have to type in anything, because I know the answer to most of these, is do you have access to a candlestick chart? Or what I refer to as a candle chart. I'll use that term interchangeably. And everybody has access to a candlestick chart. Why not learn how to correctly use them to help improve profits and decrease risk? And that's what I'm here and working in conjunction with FX Street to help you do. The Japanese have a wonderful proverb, deep roots are essential for a tall tree. And your roots to a deeply successful long-term Forex trading career, whether it's full-time, and that's why I place so much emphasis on education as FX Street does. And we're here to make sure you learn how to use candlesticks correctly. Okay, even for those who are using candles, the odds are you're not using them correctly. That's why at our shop we have what we call Nison Candlesticks, candlestick training the right way. As the first to reveal candlesticks to the Western world in the 1980s, my work is the foundation of all candlestick research, all other candlestick literature out there. And by the way, we'll be telling you how to get some free resources at the end of the session today. But my goal here is to make sure you understand how to use candles. We're starting with the basics today, the correct way. There's a wonderful testimonial I got from Scott. Everyone that teaches candlesticks quotes the master. Why not go to the master? Essentially, what I've done is English translations. And again, I've tapped into generations of use, costing hundreds of thousands of dollars, decades of work uncovering and still uncovering these valuable trading strategies. And obviously, I won't have time to go through everything today in this brief 30-minute or so session, 45-minute session. But we'll show you some of the major attributes of candles, and especially, our goal when we're trading is making money. So we're going to start to show you how you could use Nison candles correctly, candles correctly, to find those golden trading opportunities. But just as important as knowing how, what money to make today, it's all added together. Okay, how much you made and how much you didn't lose. So we'll look at some of the ways you can avoid some potentially bad trades as well. And that's another part of the goal, not to lose money. And that means protecting trading capital. And we'll look at how to avoid some bad trades. And again, there's a lot of strategies we won't have time to go into, like knowing when to exit. You use candles for exiting, and a body, and sometimes instead of a black real body, it'd be red. So it doesn't matter what colors these are, as long as you understand consistency about the opening and closing. Now, the lines above and below the real body are called the shadows. The top of the upper shadow is the high of the session, and the bottom of the lower shadow is the low of the session. Okay? And again, this could be a 1-minute chart, a daily chart, a weekly matter. The line to your right are called doji. And doji are sessions where the opening and closing are the same. And we're going to look at how to use doji in a couple of minutes, because it's a really potent potential reversal signal. Is candlesticks give you twice as a bar, it tells you what price the market's at, so is a candlestick chart. But the candles really excel at giving you the force behind the move. And what that means is you could tell if a trend is losing momentum or not within a single or 2 or 3 candlestick lines. So let me show you an example here of the candlestick. And I'm not going to go through all this. You could, do this on your own after. I'll be filling these in. But to show you how easy it is to understand what the Celtic line, okay, the open is 23, so that's the opening. The close is 25, that's the close. So we know we have a white real body. The high is 26, and the low is 21. And again, I'm not going to be bothering to go through all these, but let me just show you again the beauty of understanding why candles are so simple. Look at this candlestick line. Okay, this is a particular candlestick signal, actually, and for those who know about candles know what the signal is. But, don't worry about the name of this particular signal or pattern. Look at what this is showing us. This is session 3. So we can see the market opened here. Had we know it opened there and not down here? Because it's a black real body. The market opened here. During the session, whether it's a 5-minute, a daily, or weekly, it rallied and closed at the low of the session. Now, does this look bullish or bearish? Well, obviously bearish. So you can see how easy it is to read the market psychology. Every candlestick line tells a story. So easy it is to read the market psychology by looking at candlestick lines. Now, the next line we're going to be looking at, this is called a doji. The opening and closing are the same, or nearly the same. And with a doji, there's a balance of forces between the bulls and the bears. Now, why is this important to know? Well, let me segue into this concept here. And some of you may have heard this, Warren Buffett's rules of money management. Rule 1 is not to lose money. Rule 2 is don't forget rule 1. So with this in mind, look at this, okay? This tall white real body, the bulls are in charge. Then these small real bodies, these are actually called, these are not quite doji, these are actually called spinning tops, but they're very close to being doji with the opening and closing are the same. That's showing you the market has gone from up to neutral. And what does that do? Increase the likelihood of the market reversing. So you should be knowing not to be buying up there. I wouldn't, I don't know if I'd be selling short there, but knowing not to buy, how much it would have saved you. Okay, because it's not only, like I said, how much you made, but how much you did lose. Okay, so here, the market punctured resistance, okay, with this tall green candle. This means the close is higher than the open. The bulls are in charge. Now, notice something interesting. Okay, both prices are the same on this green candle, on the close here, on the end of this doji. But we're getting a different perspective on the market with the tall green candle. The bulls are in charge, and although it's the same price the next session, the doji, the Japanese would say the market is tired. So if you happen to be long, certainly time to scale out of long positions, lock in those profits. But again, same price, but because the way the candlestick line is constructed, we get more information about the force of the move. This green candle, the bulls are in charge. The doji, the market is tired, i.e. the likelihood of the market reversing. Now, I've had dozens and dozens of books translated from Japanese to English, and this is one of the translations. And notice the title of the slide, Every Candle Pattern Tells a Story. Combinations of bullish and bearish candle lines indicate the direction of the market, and investors, and I'd also throw in the term traders, investors and traders' psychological conflicts at important turning points. So let's look at a particular candlestick signal. We look at doji. Now let's look at the engulfing pattern. A bullish engulfing pattern is when a white candle wraps around a black real body. Okay, this is a Forex bullish engulfing pattern. The candle patterns in Forex are different than they are in non-Forex. So this is one of those nuances. So this is a Forex bullish engulfing pattern. The opening can be the same or lower than the prior close. And it's a white real body that wraps around a black real body. And visually, we could see, and let me go back to the prior slide here. See, indicate the direction of the market and investors' psychological conflict. So think about what's going on here. Who's taking over from who? Who's taking over from whom? Bulls are taking over from the bears. Okay? So we could visually see that the market that might have been formerly in a downtrend is now losing momentum on the downside. Okay? Bulls taking over from the bears. And the flip side is the black real body, the market's moving up. The bears are taking over from the bulls. Now what's nice about candles is because you don't have volume in Forex, you can kind of use these as a gauge of force. So long black real body, strong downside momentum, small white real body telling us the upside momentum is losing a little steam. It's a little bullish, but the smaller the real body, the more likely a reversal. And again, for those who know how to fully use engulfing patterns, there's nuances, like you compare the sizes of the real bodies. Market has to be in an uptrend. Okay, this is a general, this is a A basic definition of engulfing patterns is actually more strict definitions to increase the likelihood of the market reversing. But the goal here is to show you, even using simple candlestick information, that is the bears taking over from the bulls, how you can add candles as another weapon in your trading arsenal. Okay, so here we had a bullish engulfing pattern, a white candle wrapping around a black real body. Okay, our target was the recent highs over here. Okay, now notice how the market got near resistance over here, but there was no signs the bulls were losing steam. Okay, over here, the small real body, with the opening and closing are the same, is showing us that the market is losing steam and time to lock in profits. Okay, now by the way, again, be real careful. This is a basic session. This is not, see this black wrap around the white? This is not a bearish engulfing pattern. And again, we don't have time to go through the specifics of, all the nuances, but a bearish engulfing pattern really has to come after an uptrend. So a little note of caution, don't use what I'm doing here to start trading with candles, because you would have thought this is a bearish engulfing pattern. You'd be selling it here right at the wrong level. Okay, there are nuances that are really, really important to know before you start putting money on the line with the candles. Okay, this is a bullish engulfing pattern because it does come after a downtrend. Reading the market's message quickly and accurately. You think this market had problems up here? Okay, bearish engulfing pattern, bearish engulfing pattern, right at the same resistance. What a great time to think about selling short, of course with an appropriate stop above the blue dotted line. Okay, many of the candle signals you can actually use as stop out levels, like the low of the bullish engulfing pattern should be a support area, the high of the bearish engulfing pattern should be resistance. But what's great about trading Forex is that you can leverage your position. So you may be lightly leveraged here on the first bearish engulfing pattern, add to the short side here and increase your leverage over here. And obviously, by increasing leverage, if you're correct, you're increasing the percentage returns. On the flip side, if you're wrong, you're increasing the percentage of losses, and that's why it's really very, very important to set stop out levels. But when you have a confluence, a grouping of indicators together, the odds of return are much, much higher. And I put this in, if I had only known this, okay? That's what it's all about. Education, being able to recognize these golden trading opportunities. Now, there's a wonderful quote from Bloomberg magazine, "Fortunes are made by those who can call the next turn." And here's one of my dozens of Nison power concepts. And you can improve trading success by using early reversal signals of Nison candles to enter and exit. And Fuji made some nice comments about our Forex DVD set. Thanks for that. And I'll give you a contact person to ask about that. This is really an educational session. And I'll be giving you resources about how to continue your education. But this is what it's all about. Okay, getting those early reversals, the candles. The reason I work with institutions and doing seminars, and I used to do advisory services. I just got too busy. But recently I've decided to help the retail public because the institutional traders I was working with had all the benefits. So now I'm revealing these strategies to the self-directed private trader or investor, whether they use Forex or any market. And the reason they're so popular on the institutional side, and also for those who understand how to use the candles correctly, is these early reversal signals. So here we have a shooting star let me go back here in the blue arrow. Okay, but let me ask you this question. All right, and I'm getting a lot of questions about the DVDs, and again, I'll give you our contact person a little bit later. Anyway, what two factors? Okay, one candle and one Western indicator would cause you to cover shorts or go long after this long black candle. So let me go over this question here. And I have a lot of Q&A charts that we have in our education because it's the best way to cement your education and make sure you understand the concepts I reveal. So let's say you shorted on the shooting star. You have this long black real body. Now the question is, what two factors on this session here that I'm highlighting or circling with the pointer, what two factors here would cause you to cover shorts, or maybe if you're flat, to go long? And one's a candle signal, and one's a Western signal. So type in your answer for that. And I'll give you a little bit of a hint. Remember what I said about using candles to show us the force of the move. So who's in charge here with this long black real body? Okay, the bears, right? Right, you got it, Fuji. Yeah, well, you have my DVDs, that's why you know. A small real body, almost a doji-like session. That's right. Small real body means the trend has gone from down to a market that's in a tug of war. And you can see how the market is, what the Japanese would say, separating from its trend. The bears are in charge. Now, really nobody's in charge. And the second aspect is this is also confirming a support area. Look at these lows here. We'll look at this power of combining Eastern and Western strategies in a couple of minutes. So, correct. You have the small real body showing us the bears are losing steam. And just as importantly, the market's at a support area. Okay? Make sense? Okay, and also a bullish hatomy. And for those who who have the education, you know all this stuff. A bullish hatomy. Again, that's not a pattern we're talking about today, but just shows us the market is losing momentum. Okay, let's do another chart challenge here. Okay, this is a bearish descending triangle. This is a classic Western charting technique. A descending triangle is a support area, and then you have lower highs. All right? Now, what would you do here and why? Let's say you're flat. Would you be selling because you have a bearish candle, a bearish Western signal? Or would you be standing aside? And the correct answer is, drum roll please, in spite of the bearish signal, you should be standing aside. Why? And again, we're going to see the value of education. This is the, this third arrow is the one I asked you about. Look at this. Bullish engulfing pattern, green wrapping around the doji, that's also a bullish engulfing pattern. So although these are bearish signals, there's a bearish Western signal, okay, you have a series of bullish candlestick signals. In fact, for those who are aggressive, you can actually be buying it. But knowing not to sell here, look how much money you would have saved. Once again, education is what it's all about. And that's why I titled the slide, one of the best ways to make money is not to lose money. Okay, what pattern is this? The red wrapping around the green. What pattern is this? This is one of the patterns we talked about a couple of minutes ago. Right, a bearish engulfing pattern. Great. Red wrapping around the green. And second question is, what happened before the bearish engulfing pattern that signaled the market was stalling? Anything happen? Doji, great, okay. Congratulations on picking this up so quickly. Great. And it's not a shooting star, okay. Over here, it would be almost close to being a shooting star. The upper shadow may not be long enough. But right, the doji. Look at the beauty of the candles. Who's in charge here with this long green candle? Bulls. In one session with this doji, the whole tone of the market had changed. Went from up to more neutral, a warning sign to take profits, lock in longs if you bought, or at least knowing not to be going long here. Okay, and then the coup de grace came with a bearish engulfing pattern. As I referenced before, you can do a lot of strategies with trade management with candles. So, for example, the high of the bearish engulfing pattern here should become resistance. So if you do short it on this bearish engulfing pattern, it looks like a great short, by the way. Keep a stop here. My target would be down here. Okay, so you're looking at, making 140 pips, which unfolded in a couple of weeks. Okay, but, we're not talking about trade management strategies and so forth. We're just looking at candles, but always take into account trade management, setting protective stops, and so forth. Okay, now add Western candles, and this is why it's great working with FX Street, because you're getting education from their other resources. And whatever you learn from FX Street or on your own, add your favorite Western indicators, or any indicators, even if you're looking at fundamentals. And again, this is one of my dozens of Nison power concepts. We looked at a couple of other ones today, or one other one today, so we'll look at this one now. So here, for example, fib retracements are very big in Forex. So we have a fib retracement zone from on the sell-off over here, and right at the fib retracement is a bearish engulfing pattern. So if you like moving averages, volume, I have my favorite Western technical strategies, my favorite Western indicators, and I add those onto candles, as you should as well. Here we have just very basic, a bullish engulfing pattern at a support level. All right? White wrapping around the black, right at a support level. Okay, you want to see how the candles, even the basic information we're talking about today, could market is typing in yes, yes, yes. Okay, at the lows on the Euro-US, nothing pattern, of course, stop. Okay, the first bearish signal we got was bearish engulfing pattern. So you could, if it's there, this trade, okay, that would have been 350 pips in your profits. And this is what candles are all about. Giving you those early reversals on when to enter and when to lock in those profits. Now, there's a wonderful Japanese proverb. I have dozens of proverbs. Okay, if you want to see farther, you have to go higher. And as I made reference to before, we just started down the path of education. We looked at doji. We looked at, if the market makes a new high with a doji, don't go long because new high should be made with candles. We looked at the bullish engulfing pattern where the white candle wraps around the black wheel body where the bulls are taking over. We looked at a bearish engulfing pattern where the bears are taking over. We discussed very briefly and show some examples of how you can combine Western indicators with candlesticks. We looked at fib retracements. We looked at something as basic as a support area. But that really is going to help boost your potential profits by adding candles to your favorite Western strategy. And if you want to continue your free education, I'm going to give you a Nison chart challenge in a little bit. Go to this link over here, right? And you'll be able to register for my free video newsletter. I do them twice a week. I give trading strategies. I do market updates. Your emails are kept strictly confidential. And what we decide to do, once again, to really make sure you understand some of the concepts we talked about today, we actually threw in I threw in on a chart challenge on that link. I'll give you the link again. And there are 3 signals that hint of a reversal. Okay, and one of them is actually going to surprise you. And one is going to make sure you don't misuse candles. So to see this question again and then to get my answer, to see if it matches up with your answer, go to this link, www.candlecharts.com/free FX education. Set this up for you.